Good morning, good afternoon, good evening, depending where you're joining us in the world today. We're sitting with you here with an emergency update about what's happening with Silicon Valley Bank and the collapse that's happened over the weekend in America, what we can expect, what is being said, and where we're going to go from here. So without any further ado, let's go straight into, and I want to share my screen to see what the news is saying around this. So first up, we've got here an article from Bloomberg saying that why is everyone talking about SVB? Everything we know about the bank's collapse right now. So this is the first article that came out about 3 days ago. One of the first articles that started to speak about how the bank is failing, why the FDIC has taken receivership. So we're going to get a little bit more into detail. I've got a tweet that pretty much breaks it down very, very easily, which I want to go through with that. So Brian O'Connor on Twitter came out and gave a very, very easy to follow, easy to understand explanation. So here's some quick statistics about what happened with SVB. They have $190 billion in deposits back in 2021. They work with about 50% of venture capital funding startups, and they bought about $80 billion in mortgage-backed securities. So now customers are rushing to get their money out, and this is what caused the bank run and caused the bank to collapse. So the CEO, Greg Becker, looks at SVB finances. He gets tense. He sees last year's bought $80 billion worth of mortgage-backed securities. That worked fine up until the government put a spin on interest. So they bought a lot of these government bonds or T-bonds. And they were getting about 1.5% per annum return. Now, since the government started increasing interest rates, these no longer became profitable because now the interest rate is 4.5 and they're only getting 1.5% return. Now, when what they tried to do is they started to realize that this is risky. They've got low return. They've got and the US government bonds now, they have zero risk, agreeing in 2.5 return of what they have. So they knew that they were that the value is going to start falling fast. So they made two moves. One is they started to sell some of their portfolio and they started selling shares for the bank. Normally, this wouldn't be such a big deal, but they don't know that the business in San Diego is failing and will take SVB down with them. So one of the most important crypto banks also failed. So as we all know, we spoke about Silvergate last week that also failed, and Silvergate had the Send network. Now the Send network was the only network that allowed 24/7 transactions from fiat to crypto. Now once they shut this down, this reduced the liquidity in the crypto market, and that was the first bank to fail. Now this wasn't a big deal because Silvergate was a small bank, but Silicon Valley Bank is one of the top 20 banks in America. I think it's like rated 17 or 16. So this caused now a bit of a contagion. So SVB went and sold some of the equities to raise cash, and they sold $21 billion in assets. This then caused panic amongst venture capitalists, who then started telling the startups to start pulling their money out. Now, once they started pulling their money out, as you guys can imagine, they lost $80 billion of value overnight. They didn't have enough cash coming in, and this is when the FDIC came in and took over the bank and put in receivership and shut down the bank. Now, over the weekend, there's been a lot of different speculation about what's happening. We've seen that USDC, which is a stable coin, they had up to 25% of their reserves exposed to SVB. Now we don't know how much they had because they said it's across 6 different banks, so we don't know. It could be up to 25%. This started causing people to panic, start to swap their USDC stablecoin for another one, such as Tether, BUSD. Other stablecoins started to also depeg, like DAI and a few others. So this is now started to cause a bit of a contagion. Now, Bill Ackman, who's a billionaire, then came out on Twitter and said that the government needs to fix this in 24 hours or face destruction. Because if the government does not back and secure all the deposits, then we're going to start seeing other regional banks having bank run when the market opens up on Monday, which is tonight for us here in Australia, or overnight for us here in Australia. As more people go to the banks and start to withdraw their funds. Now, why is this? Because the FDIC only insures up to $250,000 worth of deposits. So for the average person, that's plenty of money. But a lot of these banks, or these banks particularly, they didn't have average depositors. They had mainly businesses and startups that had a lot more than that. So if their deposits aren't secured and aren't insured, which they're not, it will mean that these banks or these businesses are going to lose their deposits. They can't make payroll. Businesses are going to start to collapse. People are going to start losing jobs. So now Bill Ackman is calling for the government to come in and step in and bail these banks out or find a solution. So what they're trying to do is they're trying to find another bank that can buy them out, or they're looking at other ways in which they can secure deposits funds. So at the moment, what we know is about 50% of deposit funds will be secured by Monday, and the rest will be secured in the short to medium term. However, this doesn't pay the bills. And what we're also starting to see is, because of this panic and it's spreading around, when you have panic, it spreads around like wildfire. We're starting to see now, and I want to share this, I'm going to play this video. We're starting to see here these massive lines outside of banks where people were trying to withdraw their cash. So this is a bank here. I think this was in Brentwood, and as you can see, people are lining out the bank to try and get their cash out. So what they're worried about in the US right now is there could be a massive bank run on regional banks. And if that happens, those regional banks will start to collapse, because all the banks in America right now, or a lot of the banks in America right now, have exposure to the low yielding 1.5% treasury bonds, which they bought back when interest rates were at zero. Now with interest rates being 4.5 right now, what that means is, the banks aren't making as much money and they are actually in the red. Now, what is making these things even worse right now is that Janet Yellen went out on CNN, I should say, at Face the Nation, and she actually said that the government is not looking at bailing out the banks. They said they bailed out banks in 2008, and they've put laws and regulation in place that it won't happen again. So it's going to be interesting to see what happens. I want to play you guys a short video by Janet Yellen, where she actually speaks about, they're not looking at bailing out the banks.
In the United Kingdom has said that the government there has ruled out a bailout of the UK arm of Silicon Valley Bank. Have you also ruled out that kind of government intervention?
Well, let me be clear that during the financial crisis, there were investors and owners of systemic large banks that were bailed out, and we're certainly not looking, and the reforms that have been put in place means that we're not going to do that again, but we are concerned about depositors and are focused on trying to meet their needs.
So as you can see, she's Janet Yellen has said that they're not looking at bailing out the banks, but they want to secure depositors' needs or meet depositors' needs. What she said, she didn't say anything about securing depositors. She said that they want to meet depositors' needs. Now, what does that mean? I have no idea. We need to find out what they do. We know that the Fed is meeting at 11:30 a.m. on Monday in the US to discuss this, so we need to wait to see what happens. Now, on the back of this, because Yellen said that they're not going to bail out banks, a lot of people start to realize that their money is not insured. The reality is the FDIC insures something like $22 trillion of deposit funds, but they've only got something like $22 billion in funds. So if they do have a systematic meltdown over there in America, which is going to spread all over the world, they don't have enough money to pay out the insured funds. And we know this, we've spoken about this in the past, I've spoken about this on our YouTube channels. And on the back end of this, what we have seen is Bitcoin started to pump. So over the past 24 hours, Bitcoin has pumped at about, it's pumped at about 4.5%. So it's gone from about $20,500 up to $21,500 right now. It's trading around at $21,315. So people start to realize that money in their bank is not insured, it's not safe, and they're starting to move over to Bitcoin. Now, what do I think is going to happen? Now, obviously, I don't know the future. I'm only speculating. What my personal opinion is, one of three things could happen right now. One, the Fed can turn around and bail out all the banks, which then will mean that they're going to turn the money printer on, which is going to cause more inflation and more pain. Two, they decided not to bail out the banks and allow banks to do bail-ins, which is something that has been spoken about previously. We've seen it happen over in Cyprus back in the early 2010s when their banking system started to fail and the European Union decided not to bail them out. They started taking depositors' money. Or three, they allow for a systematic collapse of the whole banking system, which will then pave way for CBDCs. Or they can do something completely different, which I'm not aware of, and I could be completely wrong. So, and we can see a completely different outcome. The end result is no matter what they do, there is going to be pain in the coming days, weeks, and months. So you need to prepare yourself, you need to start putting your assets into something that is more secure and more safe, and look at ways which you can hold cash, because if banks start limiting deposits and limiting withdrawals, I should say, on cash, whether in Australia or in America or anywhere in the West, and if this contagion does go worldwide, and they start limiting withdrawals on cash like we've seen in other countries, then people are going to struggle to be able to pay for bills, buy food, petrol, and do everyday living stuff. So make sure you've got some cash on hand and make sure that you are safe out there. Thank you very much. I hope this has been helpful, and we'll see you guys at the next Breakout Solutions live stream. Peace out.